Hey investors, today we're going to discuss private equity. So if this is a term that you have actually heard or you think you heard of and you don't really know what it is, this is the video for you. I'm going to break it down, make it very simplistic. So at the end of this video, you're going to be able to understand what private equity is, how you can find it, how you can invest in it. And so maybe you are wanting to have the benefits of real estate, but you don't really want to own rental properties. You're like, man, that is going to be a crazy amount of work. I don't want to own, 50 rental properties like Dave. That sounds like another job. And it kind of is, unless you have tons of systems built out. And even then, you're still managing somebody at some level. And so maybe you want something that is a little bit more passive. And so that's what we're going to do. We're going to demystify private equity. So if that's what you want to learn about, you're in the right place. So let's chat about private equity. And before we really dive into it, I want to show you a few things that you could invest in. And so this is a winery and a golf course in New Jersey. This is a parking garage in Clearwater Beach, Florida. Here's a hotel in Fort Knox, Kentucky. This is a mobile home park with individual boat docks in Central Ohio. Or maybe you want to lend your money out to other real estate investors and get paid kind of like a bank. Those are called debt funds. And so the reason I'm showing you all these things is these are all properties that I'm actually invested in and you could be invested in too. And so one of the things that I wanted to do is kind of flip your head on what you can invest in. So you don't just think like, hey, I invest in the stock market, I can invest in the S&P 500, I can invest in Apple stock. And I had a phone call a while ago and it was from a good friend. And he called me and he said, Dave, I'm going to purchase a winery. What do you think? And I was like, what? What do you... And he said where it was, so I looked it up real quick. This is the picture of the winery that he and a partner went in and purchased. It's the most gorgeous property. But the reason I show you this is because it kind of flipped my head on what we can purchase, what we can't purchase. Now, a lot of these properties that I showed you are super expensive. So it's not like one person purchases them. It is usually a group of investors, almost like you're purchasing a share of Apple stock and you just get a little small portion of the property. But you don't have to manage it. And that's the amazing thing about private equity, similar to stocks. And so I want to show you these charts too that go over the difference between private equity returns and the S&P 500. But this first one just shows you, and it's by Cambridge Associates US Private Equity Index. It just shows you how much the returns have been in private equity compared to the S&P 500, which is the standard we all think of like, hey, this is the best thing. And it is outperformed for the majority of time. It looks like since back 1994, it's outperformed the S&P 500 handily. And so not something that I totally knew about 5 or 10 years ago, but I've been diving in deeper over the past 5 years. And so this is another chart comparison that just shows you over the last 20 years, 15 years, 10, 5 years, how private equity has done compared to the S&P 500. And the S&P 500 has done really well. So 9 and 11% returns are great. If you can get those all day long, that's terrific. But the thing that I want you to see, and the reason that you should even be watching this, is that private equity has outperformed the S&P 500 for all the past of the 20 years. And so super important, something that you should learn about, and something just like when my friend called and said, hey, I'm purchasing a winery. My first thought was, I didn't even know you could do that, first of all. And my second thought was, all right, cool, let me dive into it and see what this is. And so that's what I'm trying to share with you of private equity, is this is something you can invest in. You just kind of have to understand it, do some research, and know that it's available because it's not mainstream. It's not like when you come out and hey, I see Apple stock. You don't think the same thing when you're walking by maybe a hotel like that Holiday Inn Express I showed you. If you're walking by a hotel, you don't think, oh man, I can invest in this. Or maybe you do, you just don't know how. So that's what we're going to talk about today. And so if this is something that you're interested in throughout the video, I want you to go in the comments and say, hey, Dave, I'm super interested. I want to learn more. I will do more videos of this if there's enough interest. But if there's not interest, then I don't want to do videos on it. And we'll go back to just doing all how you can invest in rental properties. But I think this is important part of your wealth building. And if you don't want to invest in rental properties, this is a great way to build your wealth. So I didn't want to skip it altogether. I wanted to share with you guys what I'm actually doing. And so let's talk about the definition of private equity. And so when I hear this term, when I first heard it, it's confusing because it's such a generic term. So I'm going to make it super simple for you. Private equity is investing in businesses that aren't traded on the stock market. Okay, that's it. So if you go invest in Apple stock on the New York Stock Exchange, that's not there's public equities. Okay, they're called public equities. They're stocks. But if you invest in your friend from across the street, Joe, that has his plumbing company and says, hey, will you front me a bunch of money and you can get 50% of the profits? You are investing in private equity because Joe does not sell shares on the public stock exchange. So that is private equity. Don't make it super complicated. It doesn't need to be ritzy, fancy. It's just trading private businesses. And so once you understand that, you can kind of demystify it. And then we can talk about how we can find or how we can invest in this stuff. And there are companies on the stock exchange that do this. So in essence, you can invest in some ETFs, in some regular stocks. A big company that some people have heard of that is very mainstream. Some people love it, some people hate it. It's Blackstone. I believe the ticker is BX, but they are a private equity firm. So even though they trade on the public equities, so you can buy shares of Blackstone, their entire company's job is to take your money that you invest with them, and then they purchase private companies. And then they usually make them better, make them fix their issues, use their marketing channels so they can make more money, and then they sell those companies, and then that's how their businesses are set up. So they purchase companies and then resell them. That's usually how the bigger private equity firms work. But private equity doesn't just mean those big firms. You can be the little guy like me and still invest in private equity and do pretty well. And so let's talk about the pros and cons of investing in private equity, and then we'll get into where you can find it. So pros and cons of private equity. And like any investment, it all has risk. So know that. I'm probably going to repeat that again, but know that just because it's private or it's something there, it has risk. The first pro is it does have a higher potential returns. You saw those charts that I showed earlier. That's why I want you to kind of know a little bit about private equity, but it has higher potential returns. Also has lower market volatility than stocks overall in general. And so the stock market can go up and tank, but because private equity is usually illiquid, it's not like people are pulling money out, putting money in, pulling money out, putting money in. It kind of stays a little bit more stable than common stocks or public equities. Other pro is its access to exclusive investment opportunities. So when you're investing in the winery, for instance, that I showed you, or the first winery or golf course or hotel or mobile home park with the individual boat docks, those are exclusive, and it's not like you're investing in that share of Apple. And so it's just a smaller pool of people. And usually when you have a smaller pool of people, you have bigger returns. People can find inefficiencies more often than in an overall market. And so I don't want to get too in depth into that. But last thing that I really love about private equity is you can cater your investments to your needs. And what I mean by this is maybe you need more cash flow. Maybe you need more capital preservation. Maybe you need tax advantages because you have a high W-2 income and you're like, man, I'm paying so much in tax. I'm paying $30,000 in taxes, and I'd rather be investing all or a portion of that money. So you can kind of cater your investments to your needs, which is cool. And you can do that in equities per chance, but not as much. Private equity really allows you to cater to exactly what you want. Now let's talk about the cons. Some of the big cons of private equity is it is illiquid. Money usually gets locked up for a period of time. Sometimes it's a really long time. Sometimes they say, hey, we're going to lock your money up for 10 years and you're not going to be able to pull it out. So unlike Apple stock where you can buy it on Robinhood today and tomorrow you can pull it right back out, that's not normally how private equity works. Normally you're putting some investment in and you're leaving it in there for a long time. Sometimes you're getting cash back in the meantime in distributions. And then at the end, you get a big lump sum back, hopefully with appreciation. That's how it's supposed to work in the right case scenario. Now, other cons are it does have higher fees because you're having somebody that is a private company that is operating it. And so sometimes there's higher fees. Sometimes there's higher risk. Since there's less SEC regulation, you can invest with somebody that maybe is just a bad operator and just tanks your investment. And so you go from, a lot of money to zero. They can lose your entire investment. So there are risks. Like we just said, all investments have risk, and it does require more diligence. So you can't just go on Yahoo Finance and look at a PE ratio, profit to earnings ratio. You have to kind of dig a little bit deeper to find, profit and loss statements for companies or for maybe a multifamily building that you want to invest in. And so you have to do a little bit more digging. It's not readily accessible, or that operator might just not show it to you. And so you just have to do more research and more work. And so let's talk about some private equity investment options that you have. So we're going to talk about where you can kind of find these investments. And so some of the main ones, if you might have heard of real estate syndications, and all that means, so we're going to strip out the fancy word syndication, and we're just going to say that it's real estate and that it's usually a larger chunk of real estate that a bunch of investors invest in together, like crowdsourcing. And so there's different crowdfunding platforms that you can invest a small piece into a bigger chunk of real estate. One of those is Fundrise, there's Yield Street, there's Realty Mogul. I'll put all links in these descriptions, so don't have to write these down. There's Ground Floor, which actually does lending. And there's a really cool company that I like that's called Invest with Roots, ROOTS, that invest in single family properties in Atlanta. And their mission is basically to provide affordable housing, but they also let the tenants participate in some of the upside of the house by giving them shares of their private equity. And so it's kind of cool to be able to invest in something good and something that's helping and something that you believe in. There's also other things. We talked about Blackstone, but there's BDCs, which are business development companies. Sometimes they're traded on the New York Stock Exchange. And so you can invest in those, and then they go out and they purchase private companies. And same thing with ETFs and mutual funds that have private equity exposure. You can purchase these ETFs and mutual funds, and they do the private equity. Other ways to find investments, like I showed you earlier on, these individual investments, one great way is to go to investor conferences. So there's a couple investor conferences. There's one called the Best Ever Conference. I'll put a link in the description. One's called the Family Investor Nation Summit. I'll put a link in the description. But in essence, you just want to learn the lingo. And you can do that from a lot of these crowdfunding platform sites, like your Realty Moguls, like your Yield Streets, like your Fundrise. Because if you don't know the lingo, it's hard to understand what the heck they're talking about to compare investments to investments. So some of the lingo that you're going to have to learn is IRR, is multiple, is cash on cash, which is COC, which is preferred returns, which is waterfalls, which is pro formas. So when you're looking at these different investments and you're starting to see these words, you just have to, look them up and start to understand them. And once you start to understand them, it's going to help you a lot in your investing journey in private equity. There's also some large investor groups that you can join that can help you in that learning. There's 506C, which is an online group I'm a member of. There's Passive Pockets, which is part of the Bigger Pockets community, which is about being LP or a limited partner. And it's the same thing. We didn't really talk about what being an LP is, but that's where you're just investing, not as the operator, but you're just giving your money to someone else and investing in a bigger portion of, let's say, a multifamily building. You're crowdsourcing your funds to let somebody else use that and multiply your funds or try to multiply your funds. And when you're an LP, you're just a limited partner. So you're not really making any of the decisions. You're a limited partner by just giving them your funds. And so I didn't want to go too far in depth into private equity. I just want to kind of scrape the surface, give you some simplistics, but I do want to give you some rules and guardrails that will help you to hopefully not fail right off the bat. And so here's just 3 rules to help you investing in private equity, what's helped me. And the number 1 is just don't look at returns. If you look at returns and that's all you're looking at, they're not guaranteed. There's many other things that are more important than actually what they're predicting that you're going to return. And sometimes we just get stuck on that number. So just know, don't just look at returns. That is probably, sometimes you'll see like, oh, this investment's going to give you a 30% return. And so that would scare the heck out of me. And so just make sure, following rule number 1, don't just look at returns. Who the operator is much more important. What their track record is much more important. The area that they're investing in is much more important than what they're saying that they're going to make, because that's not a guaranteed return. So don't just look at returns. They're not guaranteed. My second rule is invest the minimum amount. So some of these companies have different minimums that you have to invest in. And so it's invest the minimum amount until you get used to how people operate, what their reporting looks like, and you can feel a little bit more comfortable. And then once you're like, okay, I totally understand how they're operating, I'm very comfortable, then you can put in more money. And my last tip for rules for investing in private equity is don't invest all in one operator, because that's not de-risking your portfolio. A very common thing is you'll invest with somebody, you'll get a distribution, you go, oh my gosh, this is amazing, because it's the first time you've experienced investing in private equity. And so you'll put a ton of money with them later on to find, hey, it's not as great as that first distribution that came out. So you just want to be wary. I almost call it the dip your toe in first rule. And so dip your toe in first. The last thing, in some of these private equities, a majority, you have to be an accredited investor. And so what an accredited investor is, and you can look up the definition online, but it's you make $250,000 or more a year and have done that in the previous year, and you can anticipate to do that in the future. Or you have $1 million net worth or more, and that is not counting your personal residence. Okay? And so for some investments, you do have to be an accredited investor. Not all, it just depends how that private equity is structured. And the reason that is in place is because they are trying to protect people from that, putting a big investment in, maybe all of their life savings, and then investing with a bad operator and losing it all. And so the government says, hey, we think that if people have these 2 criteria, the $250,000 or more or $1 million net worth or more, they can afford to lose it, and they should be financially sophisticated more than somebody that doesn't, which is not always the case and not always fair. So you might see that you'll see an investment that says for accredited investors only. If you're not accredited, you can't invest in that. But a lot of those crowdsourcing platforms that I talked about, like Roots, Realty Mogul, have investments that are private equity that you can invest in, and you don't have to be accredited. So hopefully that all makes sense. Hopefully I simplified it down a bit so you understand what private equity is, how you can invest in it. And again, ask questions if you're curious, if you want to hear more, if you want to know some more steps of how you can get involved in investing in private equity. And I'd be happy to answer them for you guys. I'll see you guys in another video.